Right. I have no problem with a list of criteria, but let's not get it twisted. The first one is math, right? You don't get to the other shit unless the math works, right? I do not look at a good school district side by side, washer, dryer, parking. If the math sucks, the math sucks. Should you buy a break-even rental? This is a topic, a question I get all the time. Lots of people want to do break-even rentals. I've always thought it was because they were lazy and didn't want to find the great deals. But with this conversation, we are going to go a little bit deeper. We're going to go to Dion first, who says you should absolutely buy break-even rentals. And I think he's got 4.5 reasons why you should. And we've got the lumberjack landlord who thinks you're a moron, an idiot, and lazy if you buy a break-even rental. In this particular episode, I am going to do my best to simply be the moderator, make sure that they don't get mean or too nasty with each other. But I might give you my opinion at the end if one of these gentlemen sway me one way or the other. But Dion, this is your topic. Let's start the fire with why you have actually bought break-even rentals and why you think it's a good idea.
Why do you make me do this to you, Dion? Like this? Go ahead. Go ahead.
So I have 4.5 reasons why people should buy a break-even deal. I've purchased 3. And what I'm really hoping this video is, I want Matt to have a chance to rebut me, but I want both of you and everyone watching to understand that we're not always talking to the investor that has a portfolio and decades of experience. Sometimes we're talking to the brand new investor who's making a mistake. I've heard investors.
Yes.
I've heard investors with years of experience and rental properties make the first mistake. The first time I would buy a rental property that's a break-even deal, and you can easily show that this is not a break-even deal, but I've heard investors say, I will not buy that property because it's a break-even deal, is because current existing rents on leases make the property not perform, not be a cash flowing property. I've seen investors say, nope, there was a place in a town close to me. I actually made an offer on it. The owner liked the tenants, signed new 12-month leases. Area average rents would be $1,800 to make it a decent deal. Re-signed one at $1,500 and one at $1,200 for a year. And investors in my area passed on the deal. So my way to buy a break-even deal was to go, if I lost $300 on this unit a month because it was 18 to 15 and $600 from 18 to 1,200 on this unit, I'm losing $900 a month times 12 months. It's basically this much money. If I added that to my purchase price, what does that do to my math? So I would buy a deal that would be break even or lose money for the first year, made the offer, got accepted, and then ended up buying a different one because I got a better deal. So Matt, the first one, opinion on, would you buy a break even deal with that scenario?
There you go. Make me fall back in love with you again. This is how you do it. This is you make me fall back in love with you. This is exactly right. The issue is that there are absolutely deals that we would buy because the landlord...
not only we would, I know you have bought deals that didn't pencil day one.
Yes. Yep. Absolutely. Now, usually they don't have leases in place. Usually 1 or 2 of leases is free, right? So we're not, a year I might twinge, but it has to be like it has to have the upside there. Like the upside can't be, I'm going to make, 7% when I get the rents where they should be. No. Like there has to be a massive increase there. But that being said, Dion's 100% right. I would buy a non-cash flowing deal, knowing that I can get some of the rents up within 30, 60, 90, 120 days. And I've bought deals like that, but the size of the deal, one of the deals that I bought was about $750,000. The 4 rents all calculated together were about $5,000. They were all pretty light. It made principal and interest payments, but it's what helped me drive the deal down to 5%, 30-year fixed rate debt with the owner of the property that I got the seller financing with. And by the way, not an MLS, but that deal I made work. And then within 12 months, guys, that rent went from like $4,900. Right now it's about 7 or 8, but it's because we haven't redone 2 of the units. When we finish that light rehab, we're going to be at $10,000 a month, $9,000 a month. Now that's a job that will pay $4,000 a month. It'll pay off all the rehabbing I did within a year. And now that's an excellent performing asset. But those are all the caveats added to why I can fall in love with Dion's concept there.
Yeah, so I want to remind people, a couple of folks. We had Cody Davis on the channel, and we have him on every Monday. But a video, I think it was about a month ago, I kind of challenged him because, again, if you know Cody's story, he grew to be a couple hundred units, maximum risk, leverage, all of that, and he said something like, "I'm a conservative investor," and I'm like, "What?" And basically, what he said is he takes on projects, much like Dion's highlighted here in number 1, but he has to have line of sight to 2x, rent to price within 18 months. So I think, again, in Cody Davis's case, he's taking on apartment buildings. I would never do a house, just to be clear. 18 months, too long, too many risks.
Yep.
But it's interesting. I do want to ask Dion one question on this topic, because obviously rent control has just come to your area, and that is going to limit future opportunities, right? If you have a building that should be 1,800 and everybody has signed leases at 1,200, you're now limited. I think the maximum is 7% plus inflation with a max of 10. Does that change anything? Because I think the last time you did this, you did not have rent control, so you could go from 12 to 18. You can't do that anymore, brother. Does that change anything?
It gives me more negotiation power when it comes to buying now, being able to go to owners and say, hey,
Agreed.
this is what has to happen to the price for this deal to make sense. And again, I would run the math. I did a video the other day on how rent control is making me $138,000 more profit than I was going to make in the next 2 years. So I would factor that in, because typically it's buy the property, buy under strategy 1, don't raise the rent for the next 2 years, then 5%, then not. So the second time I would buy a break-even deal. And don't worry, people, I believe there will be some of the sputtering and cussing that we saw before we hit record today from Matt by the time I get through this list, because they're not all as clean cut as the first one. The second one is I bought a break-even deal where it would not cash flow as it currently was, but there was value add I wouldn't do right away. I bought a 2-bedroom, 1 bath each side. Each side had a den with a closet. All that's missing is a wall, door, and a light switch.
Yep.
I didn't buy it and kick the tenants out. One side was an elderly couple on Section 8 on disability. They asked if they could stay there until they passed away. And the guy said, I promise it won't be long. And it wasn't. As soon as they moved out, I had a third wall. The other tenant stayed until she ended up buying a house. And so I went from a $1,300 mortgage where I was maybe making just under $2,000. So with repairs, maintenance, and vacancy and setting everything aside, it was barely break even. So now each side's rented out for $2,300. Mortgage is still $1,300. It's a fantastic deal. It did take a couple of years to get there because I wasn't going to kick the tenants out. I just saw the value add from day one and knew that, yeah, it's not a great deal today. It's a base hit. I'm not losing money. I'm not making enough money to justify this expense, but I see the value as soon as these things happen.
I am curious, what deal was that for you? Was that your first deal or of the 8? Which one?
Well, so it'd be I owned a single family, bought a duplex. It was the next duplex. It was my second investment property purchase.
That seems really early. Like if I'm thinking about new, like if you're Matt and you do something like that, or even myself, no big deal.
Yeah, no big deal.
No big deal.
Even now, Dion at his size now, not a big deal.
Yeah, no, it's like
Yeah, the problem is, and Mike, what you were exactly getting at, so it was exactly the question I was going to ask, which was what number deal was that? And because we're often talking to new investors, and one thing that we can count on in the next 2 to 4 years from banks is that they're going to be more conservative.
Yes.
They are going to be more conservative. They are increasing the amount of margin that they put on loans. They are increasing the amount of returns that they want to see landlords, where they used to say your global debt coverage ratio, where they would say, hey, if you're making $1,000, you really need to be making, you need to be getting in rents of 1,300 or 1,200. Now that number is much, much higher. It used to be $1,000, and now they're saying, hey, we want to see 1,300. We want to see 1,400. They want to see this much fluffier number, which is nearly impossible to do on a new deal. But then they look at the aging of the property. Then they're looking at, hey, let's talk about stability. Well, you're going to have stability. The problem is that you're stabilized losses. And so when they figure this into a small portfolio, what they're going to do is they're going to look at it and say, sorry, we're not going to lend you on the next one because your margins are way too tight. Quite frankly, you lose money here, you make very little. But to get your global debt service coverage ratio, in order to get there, and this is what banks are going to look at, they're going to say, you use up all your profit from your second one and you still have some profit from your first one, but now your global number is below where we need it to be. So you're going to have to do something. And I agree 100% with Dion, not tossing out those tenants and keeping them in there. That's 100% the right thing to do. Same thing we do. Same thing Zoob does. That's the right thing to do. The only downside to this, and the reason why I would disagree with it, is because it was in your first 3 and because of the duration by which you had to wait to get that increase, and the fact that it guaranteeingly in today's market would shut you down from doing your 4th deal.
Yeah, I think it hurts a lot of early investors. I think that's but again, it is the right thing to do. I'm glad we brought that up. If I were to buy that unit, I would do the same thing. It's like, yep, put it on the shelf, wait for the opportunity. All right, Dion, you've gone through 2. It sounds like these are going to get increasingly combative. So where we go with number 3?
The third one is my form of
my.
You're going to hate the half one. My third one, which I've actually purchased, which was based on legal insider trading, is when we know of an environmental change that's coming up that everyone is aware of, which is what makes it legal. I looked at a property where there was a mushroom farm that was losing a court battle that I was aware of. They were losing the court battle. The whole city had just talked about it on every social media thing. And they were spending about $35 million, the city was, on removing an overpass that had a massive traffic issue and putting in one of the European dual roundabout overpasses that takes 26 touch points down to 14, opened up an entire area where there's a Costco, Walmart, Home Depot, and Cabela's, like a Bass Pro Shop kind of thing, all in one thing. Property was right next to it. So the mushroom farm's going away. The construction for the overpass was starting. I purchased a basically break-even deal, knowing that within 2 years, not only property values are going to double, but with the smell gone, the easier traffic, rents did double. And so legal insider trading, I bought a break-even deal.
Kind of the same question. What deal, what opportunity number was that for you?
Right after the third one. This would be the 4th purchase. It means, so when I was investing in 2013, 15, and 18, I hadn't found YouTube University, one rental at a time. And all I had seen so far was Bigger Pockets articles when you were writing. And there was, hey, you can house hack. You can get up to 4 conventional loans. And I was acquire properties, not looking at financial freedom, not looking at retiring early. I was like you, get to 4. I was thinking I will not become a financial burden to my kids when I'm too old to work if I have this better financial future. I have now looked back and gone, yeah, in the beginning, it kind of slows down growth, but I knew the value add was there. I knew the environmental changes were coming, and I wasn't in a rush.
Yeah. Matt, I don't know. What do you think about this one? Obviously, you're very wired into your local markets. They're relatively speaking small, so or at least you're one deviation away from the people that have the power. Are you making these kind of investments that are 2-3 years out, kind of buying ahead, or you're like, nope, they change their mind all the time? Why would I do that?
So yes to both of those, and here's why. So yes to both of what you asked, Mike. And so it is, number one, Dion, this doesn't sound very lazy. I'm just going to throw this out there. That's a lot of work to really understand.
Sit and wait. That's not lazy.
Yeah. No, it's lazy knowing that these things are going to happen. Cause I know, like I spend time, effort, and energy getting tapped into the right people. So congratulations to you. Now I know it was partly because of your other job that you knew some of these things, which was a good thing though. So here is why. So it's the same reason I didn't like number 2 is the same reason I don't like deal number 3. Yes, there's this massive pot of gold at the end of the rainbow, and be clear, that's very much what it is. Even when you know all these things are happening, even when you know that these things are going to go through, they still sometimes don't go through. And then you've got a real loser. And because it was next to a mushroom farm, you have a real stinker on your hands. And then it's going to be like, what the hell do I do with this piece of garbage now? Because other people were buying in that market with the same level of hope. Yeah. And so that was actually propelling prices. So what you actually see when one of these things doesn't go through, guess what happens? Everything pulls back, and you pull back 10%, 15%, 20%. Well, now you own an alligator, and now you own something that has killed your ability to do deals for at least a couple of years, maybe 2, maybe 3, because DSCR wasn't really a thing back then. Now it is. Now you can kind of get around it, but then that kills your portfolio when Dion stops at 4. And he has units that the good news is if you open up the window, you get to smell mushroom shit, like, because that's what they spread on those things to make them grow. So what's really interesting is that this is an advanced strategy. Dion likes to think he doesn't do advanced strategies. He does. He likes to think that he's lazy, but he's not. And so I've just proven those 2 points. I like to rest my case before the court. But I think the third piece to this is it is very risky from the perspective that if that doesn't go through, you're dead. You're dead for years.
Yeah.
Your Honor.
So I purchased once the construction started on the roundabout and the case was lost and the mushroom farm was relocating. So I didn't do it going, hey, in 5 years, I heard this thing is going to happen. It's like, these are set in motion. The court case is over. And
Did
so
Did they lose an appeal? Because that's what
they were done. They had already relocated and staff was all fired.
Okay. Yeah, that's better. It's better.
So I'm reminded of something that has been talked about in Fresno, California for every month for the year that 20 years I've been investing, right? Yeah. When Olivia and I were driving to Fresno before we bought Norris Drive. So before number one, there was this talk of a high-speed rail connecting LA to San Francisco. Oh, by the way, it was talked about for 20 years. There was actually construction. You can drive by it now on the 99 and see like 10 miles of concrete. So again, just because something's approved, just because something is worked, doesn't mean it gets done. Right. So I know there were a lot of people buying in Fresno and Bakersfield because of this high-speed rail, and it never showed up. It never showed up. Be careful.
So to that end, Mike, what was that return like for them? So it didn't show up. Prices pull back a little bit. How long did it take them to get the appreciation they thought they were going to get like that? Like they thought they were going to get it in 12 to 24 months. Was it 10 years, 12 years?
So the people that I know that bought because of it, and again, to your point, there was a lot of capital, especially when Gavin Newsom approved $1 billion or some stupid ass amount of money. And we had construction start, to Dion's point, right? There is actually undeniable proof that there was a high-speed rail coming. All of those people sold once it was canceled. They just sold. They gave up. They didn't stick around.
So I purchased the first 3 of these break-even deals. The fourth one I didn't purchase. I probably would purchase, and I think Zuber should have purchased.
Oh no! All right, let's do it.
If I lived in an area, where the property return on investment buying a rental was negative, San Diego, Silicon Valley, and I had to live there. I couldn't move away. Work required it. Family required it. My spouse required it. I had to live there. I would purchase a house hack because if Zuber, you purchased a townhome that was negative. You've paid for it the whole time you had it. Appreciation is there. Paid down, principal paid down was the thing, but it was negative. I would purchase a house hack even if I was moved out, all units were rented, if it was a break-even deal, because I had to live there anyway, and I'd be buying a house and losing money paying for my house. I'd buy a break-even rental, even if the units were all rented out, because I'm still paying to live there just like I would owning the house. But now I have an asset that will become a rental, will have the years or decades of appreciation while I live in it over the time that I'm going to live there. So I haven't done that strategy, but if I was forced to live in a really expensive market where everything was a negative cash flow and I could find that break-even deal, which means it's better than the area average because all the other ones are losing money, I'd buy the house hack.
Yeah, you know what? When you told me you had 4.5 reasons, this is the only one that I came up with that I would have agreed with. It's like, if you're going to be in a high-priced area, and the other thing you didn't say, but I want to make sure, and you were going to live there for a decade, right? Some long tenure. It makes perfect sense because you're going to get the benefit of time, right? Time will be your friend. Inflation's a feature, not a bug. It may be break even today, but a decade from now. And again, you got to live somewhere. So this is the one that I came up with quickly that makes complete sense to me because again, you have to live somewhere. Matt, I think as a professional house hacker, I think you've got 8 under your belt. I cannot imagine you disagree with this one.
No, this is the least risky of the ones that he's brought up so far. So this is the least risky one. The thing that I still don't like about it is people still get laid off. You know, and so to point of your live last night was there was a very large corporation, people that you never rent to, that work for that large corporation because it's a rolling cycle of layoffs. Yeah. And so for me, knowing that there's that rolling cycle, okay, I can maybe not rent to them, even though they're one of the largest employers in the area. The concern that I would still have is if we're going into a downturn, my concern is, what if I'm on that list? What if some of my other tenants are on that list? So I think it's absolutely makes sense. It's the least risky. It's the one that I hate the least of
There
the
you go.
list you mentioned.
Okay, so
Well,
here's the half. We've
I was
got
going to
four.
say
Here's the half as we wrap this up.
we've been warned this half is coming and it's going to be ugly. So
Now the half is the one I haven't purchased, and I can absolutely see the argument against. Right. However, I want to make this argument for the people who get stuck on math.
Oh,
When I look at a rental, I have a list of criteria that I want. And every time, I just had it today, I won't show because the person didn't say, hey, share my name, but they said, hey, can you analyze this deal for me? Here's the purchase price, here's the rents, here's my interest rate, analyze the deal. Okay, here's my list of boxes I want to check. I want a small multifamily that's as much like a single family as possible. Side by side, not over under. Fenced yards, washer dryer hookups inside. Enough parking for each unit. I want it in a safe neighborhood. I want it in a high population neighborhood. I want a lot of economic drivers. I want a draw for tenants. So if I found a rental, none of my rentals have checked every box. Not all of them have fences. Not all of them have a garage or carport. Not all of them. One is in McKenna, Washington that had a 600 person population that is now 450. Like I don't have the high population there, but it checked enough of the other boxes. So if I found a rental that hit every single box I want, the right neighborhood, like the one I'm in, I wanted to live here, so that kind of hit it too. I probably would have bought this if it was break even. It isn't, but I might have considered it. If it had side-by-side fenced yards, all the economic drivers, safe, washer dryer hookups, lots of parking, lots of events in the area for people to want to live there, but it was a break-even deal. Math is the only box not being checked. I've got a lot of deals where I don't have the fence. I don't have this is an up-down duplex. I haven't purchased one, but I think if I found the right deal, and it's not fair now because I'm in financial freedom and I can go, yeah, I'm just going to buy this, let it sit there for 10 years. Starting out, bad idea. It doesn't have the value add. It doesn't have the economic change in the area. It doesn't have the reasons why I purchased the other break-evens. So I get if this one has a disagreement, but so many people are hung up on math. It's the only reason I want to bring this one up.
well,
A silly thing like math. Why would somebody get so hung up on that? You do realize that in the word analyze is the word anal. There's a reason that word's in there. It's because people really need to pay attention to that shit. That's what puts you out of business.
That has good math that doesn't have parking, that doesn't have a washer dryer hookup, that's in an unsafe neighborhood.
I've done that, and I've done that, and it's worked just fine. Like the margins stay more moderate over time, but there's still margin there and it still makes money.
Yeah, it's funny when you bring this one up, Dan, and I tried to be neutral the whole time, but this one is just batshit crazy. Right? I have no problem with a list of criteria, but let's not get it twisted. The first one is math, right? You don't get to the other shit unless the math works. Right? I do not look at a good school district, side by side, washer, dryer, parking. If the math sucks, the math sucks. I mean, so what are we talking about?
In my members only meetings, we go about 45 minutes to analyze a deal. We look at the math at the 30-minute mark. First, but hang on, before you do it, first, what do you have to do? Identify what it is.
Yeah,
I don't. You can't run the math until you know if it's a house with ADU, duplex. Then
I do not. I do not mind it. Hold on. No, hold on.
Washington, hang on before you say that. If it's on McKinley Avenue, it can have 1,000% return on your money. You don't want to buy it. If you know your neighborhood, so you want to identify where am I looking at it. If it's in a flood zone in Florida, I want to know my math is going to have to include flood zone insurance. Like math is important, but it is not the first metric. It's about the eighth metric. It is the most important. We can't get it wrong. Right, you can get the neighborhood wrong, you can get the parking wrong, you'll survive. You get the math wrong, you're done. I get it.
So here's what you're doing. No, here's what you're doing. In your members only live stream, and what you do as a great teacher is you're trying to get people to understand their buy box. And I agree with you. Getting the buy box right first is important. Hence, you spend 30 minutes doing it. But once you have one, the math is the only thing that matters. Right? If you don't get past the math, you don't pass go, you don't collect $200, you move on. What you're helping people understand, and you should, and let's be clear, I did it first. I went around Fresno, California for months talking to people to figure out what was going to be my buy box. But once it was logged in, locked in. It was just the math.
That's why we're learning the buy box and not learning the math, because the math
And
is
I'm-
part of the buy box. Right.
I'm totally fine with that. That's what
And
you're
we're
doing.
talking to the new investor.
I get it, but I just want people to understand, once you have a buy box, math is the only thing that matters. Then you go below that.
So
Matt,
as we're running
I
out of time here, everybody come at us in the comments below. Yes, some of them we agreed, some of them we didn't. Would you buy a break-even deal? And what circumstances would make it happen?
put it below, folks. When would you buy a break-even deal? Let us know. Guys, you're amazing. I got to run.
Ciao.